Welcome everyone, S-Tier Trader here. We are halfway through trading month number 2 on YouTube, and we are only 10 pips away from hitting our monthly goal. Spoiler alert, we actually exceed our goal massively with this trading week. This week, we are analyzing 3 different price engagements, 2 of which become actual trades. These engagements took place on March 7th, 10th, and 11th. Before we dissect my trades, recall that I aim to be completely transparent regarding my price engagements. You can follow along with your own charts by going to tradingview.com and referring to the forex.com data feeds for my forex trades and the ESH 2022 data feed for my index futures trades. If you're still skeptical for whatever reason, that's totally fine. Just know that I have my personal time listed in the bottom right hand corner of my screen. Let's get right into trade number 1. We start the trading week by looking for a short in the cable market, also known as the British pound US dollar. My higher time frame directional bias was bearish in the foreign exchange market. Recall that a mistake I made last week was rushing to go short on a Monday. This week I learned my lesson and I waited for a high to form on Tuesday before looking for any shorts. This high actually comes during Tuesday London, which is exactly what I want to see. Price then broke market structure lower before building in a premium during New York. Notice that price built in a premium all the way into that bearish order block that formed during London. This actually would have been the ideal entry to take, however, I was fast asleep during this time. Instead, I had to take a confirmation approach when I woke up. This involves waiting for market structure to shift bearishly again before I can sell when price goes higher. Notice where my 2 take profits are located. The first take profit is placed within a fair value gap. The second rests below the equal lows, which is where we are going to find just a ton of sell stops. Anyone trying to call the low in the market or chase the higher price that came after London have their sell stops resting where my second take profit is located. Price ends up cutting through my first take profit like a hot knife cutting through butter. I move my stop loss to break even, just like I always do. That's my protocol, and I stick to it. I then head to work, and my second take profit is hit soon afterwards. My full position is off after hitting my 48 pip target, netting me 34 pips on this trade. The biggest takeaway that I want you to have from this trade is just how easy it is to engage price during New York, if you know what you're looking for. The benefit of New York is having that additional information that the London session provides. Instead of trying to pick a top in London, we can use London as additional confirmation that price is headed towards our weekly draw on liquidity. We can wait and see if price actually makes that high in London. We can then wait and see if price actually breaks bearish market structure before New York. If it does these things, then we can enter in on a continuation pattern during the New York session. If you want to see me do this exact same sequence in another example, watch my second trade on trade review number 6. This was my last video. ICT often talks about how New York is the ideal session to trade, especially for the first few years of your trading career. We do not need the high and the low of the weekly or daily range to become profitable traders. We just need the meat of the move. New York gives us a chance to go for this meat. On to trade number 2, where my focus is yet again in the New York session. This one isn't actually a trade though, for reasons that you're going to see. This attempted price engagement took place on Thursday, March 10th. While the British pound hit its weekly draw on liquidity, the fiber, or euro dollar, hadn't actually hit its draw yet. After a quiet London session, price roared higher during New York, purging a ton of buy stops above. Price then breaks market structure bearish, creating a bearish order block. Let's see if you can see it. Pause the video. Price runs higher into this bearish order block, and this would have been the ideal entry. But in classic S-tier trader fashion, however, I was fast asleep, dreaming of making pips, I'm sure. My pip making senses were tingling, and I finally wake up. I saw all of the down close candles form and I knew I wanted to engage price action. Because we trade like institutional traders, I have to wait until price trades higher before selling. It can be very tempting to chase price action and enter in on a short while price is going lower. This is not how institutionally minded traders trade, however. We take our shorts when price is going higher. We take our longs when price is going lower. We do not chase price. We exercise discipline, and if price ends up running away without us being in the trade, well, I ain't worried about it, you ain't worried about it. I've mentioned this before, but of all the things ICT has ever said, and you and I both know that he's said a lot, like that guy can definitely talk. My favorite quote of all time of his is I ain't worried about it, you ain't worried about it. Anyway, my sell limit order is above price action, resting within that giant bearish order block. I wait for the retracement into my entry to occur, but it never does. Price collapses into my take profit location without me in the trade. I am glad that my directional bias was correct yet again. However, it's definitely frustrating when I call a target but I'm unable to join the move. Like losses, missing moves is going to happen. It's not the first move that I've missed and showed on YouTube this year, and I doubt it's going to be the last. The great news about this, though, is that trade opportunities occur nearly every single day, which leads me to trade number 3. Trade number 3 took place on Friday, March 11th in the SPOOS market, otherwise known as the E-mini S&P. You may actually have already seen this trade featured on Leonid369's channel. In the YouTube mentorship, ICT's focus is for us to trade the New York session. As I have discussed in this video, New York is certainly the ideal session to trade, especially when you are just learning ICT's concepts and the first few years of your trading career. There are occasions, however, when London can offer excellent setups as well. The trick with London is you have to know exactly what you are looking for before engaging price action. Let me show you what I was specifically looking for in this trade. Recall from ICT's YouTube mentorship that an order block must have a fair value gap overlapping with it. We have also learned that consecutive down close candles before the move higher combine to make a single bullish order block. Can you pinpoint where the bullish order block is on this 15-minute chart? I'm going to give you a hint. There are actually 2 bullish order blocks in this chart. Pause the video and see if you can figure out where these are. There is one bullish order block here, and there is another bullish order block here. This giant one, which consists of 6 down close candles side by side, is the most important one that we're going to target. There are 2 fair value gaps within this order block, which are here and here. These fair value gaps confirm that this is in fact a bullish order block. Look at how price hits the fair value gap portion of the bullish order block before running higher. It's just beautiful, isn't it? This run higher shifts market structure bullishly, giving us both the stage and setup for a run higher into our draw on liquidity. Now all that is needed is to execute on the trade. It is the London session, so the time component of time and price has been met. As a day trader, I'm targeting previous day's highs when I'm bullish. My stop is below the second order block. If price is going to stay bullish, it should not need to run through this bullish order block to continue higher. I enter in on the fair value gap on a market long order, and I actually eat some drawdown. This is what makes the London session so tricky. There is sometimes additional volatility that gets injected into the market, and the Judas swings can be larger than expected. My stop losses in the New York session are often tighter than they are in the London session. During London, I have to allow for larger retracements than expected, which is what happened here. Price eventually trades higher off the fair value gap and then breaks the high. Do you notice anything that formed after price breaks this high? Pause the video. Price created yet another bullish order block. those 5 consecutive down close candles form one bullish order block. When price retraces into it, this would be yet another area where we could enter. Even though it's outside a London or New York session, I could still add in another smaller position here, allowing me to pyramid my existing trade. After the algorithm allows institutional traders to buy at the new bullish order block for less than an hour, watch what actually happens next. Price explodes higher, crushing through both of my take profit locations. This price move higher wasn't because there was a surge of buyers that entered into the market at the exact same time. That's not what happened. This price move higher occurred because the algorithm repriced the market above previous day's highs. The institutional traders who bought at the order blocks can now liquidate their positions by selling to the retail traders who had their sell stops above the previous day's highs. After this explosive move occurs, retail traders would be chasing this and buying in the process. Watch how price sinks lower right after. Anybody trying to chase this move would have entered in too late. Do you recall in my last trade where I mentioned that we do not chase price? This is what happens if you chase price. Because we are institutionally minded traders, however, we don't chase price. We anticipate price expansions by reading what the algorithm is telling us. This 60 pip run netted me 40 pips on this trade. Combined with my trade on Tuesday, I am now at 74 pips for the week. You might think that I would have hit over 100 pips this week if I didn't just barely miss that move on Thursday. However, if I hit that move, I likely wouldn't have participated in Friday's price action. ICT aims for 50 to 75 pips per week. His goal is met if he earns 50 pips, and he is done trading for the week if he hits 75. I actually really like this logic, and this is what I am going to strive to hit when I'm a professional trader. While I could have hit over 100 pips this week, I also highly value the freedom of time. 75 pips per week, or 300 pips every single month, with 2% risk, will increase your account by more than 7 times the initial balance. That is actually absolutely insane, and as you are going to see, it's actually achievable as well. If I hit 75 pips by Thursday, I would rather lock in those pips and take a 3-day weekend, rather than risk those pips and engage price action on the Friday. In the meantime, I'm now at 154 pips in 3 weeks. Not only have I hit my 90 pip per month goal already, I've made more pips than I did all last month. I've also done this while starting my busy season as an accountant, as well as going to school. If you're learning that it's absolutely possible to become a professional trader using ICT's concepts, please go long on the like and subscribe buttons. Now that I'm well over my goal, I could have not traded the following week. Perhaps as a professional trader, I would forego that following week of trading and take a mini vacation instead. In this case, I knew that April was around the corner, where I couldn't actually trade due to tax season. This is why I decided to engage in that 4th week of price action, and I am just so glad that I did. Stay tuned for my next trading review as I hit my absolute best trades that I have ever done in my early trading career. I promise you, you've never seen someone do what I am going to show you in my next trade review. Make sure you pay attention to that. That's all I've got for this week. Thanks for watching, everybody. Keep studying hard. Good luck and good trading. If you want to take your first steps to becoming a professional trader, click the video on the left. If you want to see all 137 pips that I hit last month, click the video on the right. Please go long on the like and subscribe buttons. Thanks for watching.